Welcome to today's session. Thank you all for joining us today. So, at Startup Singam, we truly believe that investing in startups is not just about financial returns, it's about impact, innovation, and how we foster the future of entrepreneurship from Tamil Nadu. Today, I'm happy to share that I have at least one person representing each of this group of people and different reasons why you would invest. I have each of them as a part of my group here. And happy to introduce Aruna Subramaniam, a very seasoned social impact leader and an angel investor from Native Lead Foundation. Aruna heads Bhumika Trust, where she drives impactful initiatives in disaster relief, education, and women empowerment. Her deep commitment to social cause and investment in ventures uh, makes her story a very inspiring one. Welcome, Aruna.
Thank you so much for having me in a session where we're going to talk about this as an asset class.
Thank you. Uh, Next, happy to introduce our good friend Chandrasekhar Kuperi, Shekhar as we call him, a seasoned finance and M&A expert with over 20 years of experience across global multinationals. He is the founder of Anova Corporate Services and Peaceful Progress, an active angel investor. Shekhar brings in a wealth of knowledge in creating value and strategic growth through investments. Welcome, Shekhar.
Thank you so much, Startup Singam. Thank you so much, Arun sir, and absolute privilege, being here. Thank you so much.
Next, another good friend, Nirmal Jain, who again another strong pillar of support during our season one of Startup Singam, Jeeto Jif. So I think Nirmal was a part of the second episode that aired, and he has been a tremendous support, Nirmal and Jeeto. Nirmal Jain is the founder and managing director of K Group of Companies and trustee of UIT Educational Institutions and Chinmaya Vidyalaya. Nirmal is an active angel investor from Jeeto Jif, as I mentioned, and brings a wealth of experience in both business and leadership in startup investments. Welcome, Nirmal.
Thank you, Arun and Startup Singam team.
Finally, I'm delighted to welcome Santosh Palavish. Like I said, some of them actually invest to make sure that what they have actually earned from the ecosystem, what they have gained from the ecosystem, the kind of support that they have received during the when the times were hard. There are people who actually put in their effort and give it back to the ecosystem. Santosh is a first generation entrepreneur, an active angel investor, and CEO and founder of UMM, a global digital consulting firm. He's a tech entrepreneur turned angel investor. Santosh today will moderate a session and share his invaluable insights into both tech and investment sectors. And he has a very demanding job for today, wherein he works with all three of the investors who have come from three different verticals and bring together a story and add his own story as an inspiration. So with this, I
Thank
will
you.
hand
Thank you,
over
Arun.
to Santosh. Santosh, welcome and over to you.
Thank you so much for the warm introduction. And good afternoon, good evening to all of you. I think much gratefulness and thank you to Startup Singam platform to have organized this. And so let's get started. So thank you first of all to my panelists. And it's a great pleasure this afternoon to be interacting with you all. I think we'll start. I'm going to start my first question with Arunaji here. But Arunaji, my question to you would be is, obviously, can you give a little more introduction about and what sort of do you into the startup world of investments? How come investment into startups and etc.? If you can walk us through that, please.
First question really is Santosh wants to know how did I get into the startup space at all? How did I start investing in startup space? Let me make it brief to just throw back a little bit into where I come from. In my avatar as a management consultant, I used to work with SME segment. I always used to work with businesses and not large corporates. And it was intriguing to figure out where they were getting stuck and how to get strategic partnerships for them, funding for them. And, that was a space that I was always habiting already in my, when I was a management consultant. And almost over 10, 15 years ago, I gave up consulting and I moved into the nonprofit segment. I felt quite early on that it was time to give back, and I've been working with NGOs, work pandren, and I headed Bhumika Trust, which is a fairly large NGO based out of Chennai. So this mindset shift that when I started working with these people and small businesses through the course of my NGO journey also, I started mentoring businesses. And it was very, very fascinating to see, that I could actually give them some small fixes for them to move ahead. And during this course of this journey, one high net worth individual who had invested in a company, Upper Vanda, it was not called startup. Startups were not so famous. So he had put in money in an individual and his wife, saying that they have something very good. Can you mentor them? So I started working with them, and then huge number of problems in terms of how do you get certifications, and then how do you reach the market when there's no Instagram, and it was those kind of days. Eventually, the startup actually didn't take off, in spite of all that we put into effort into that. But that was very challenging and intriguing. And in this journey, over about 7 years ago, I met Shivraja, who heads startup. He's the CEO of Startup Tamil Nadu. And he said, given your interest in social impact, you should come into Native Lead. And he gave me a brief on Native Lead. And what caught my attention was, he said, we work primarily with tier 2, tier 3, small towns. We have the chapter on the Erode, Salem, entrepreneurs come here. When he said that, we are trying to build a equitable space. Chennai people are always privileged because they have more access. But we want to build an environment, ecosystem for startups in the tier 2, tier 3 towns. And that's how we started. And so therefore, that ecosystem actually, I took a couple of years to really understand the whole thing. And then now I'm well entrenched into the system. And, I've made a few investments, and I've actively, talk to the founders that I have invested with and all that. And that's how I became a part of investing.
Right. That's very interesting, ma'am. I think from NGO to non-profit to eventually mentoring. So that's a good angle of attack. And considering that you said you work with a lot of startups in tier 2 and tier 3 towns, I think, like you rightly said, they need a lot of mentoring from a foundational confidence level, to try and some great startups have come from tier 2, tier 3 cities, right? A lot to talk about that.
Yeah.
Now, I'll jump on to Nirmal now. Hi, Nirmal. A quick background about yourself, and then what pulled you. I know you do a lot of work with IIT as well, but what drew you into the startup world, Nirmal?
Would like to say my journey itself throughout the life, right from teenage, it has been ups and downs. So like my family, as a family, we were into share trading and those kinds of businesses, financial markets we were into. So we had made lot of losses during 95, 96. So I was as young as 15. My dad was chartered accountant. So at that time, when we had a huge loss, I used to see why we had lost money, how we did not invest properly. So right from that teenage, actually, I had the intent and inclination towards investments. In the later stage, when I was around 25, 26, I started investing in education. First, I myself got 2, 3 good seminars, and I went to 3, 4 places. And after that, I started on my own visiting educational companies, and after that in 2016-17 we really ventured into educational field. We started our own college, our own schools, and now as an honorary in Chinmaya Vidyalaya and our own group of college institutions like UIT group, CBSE schools and colleges, we are handling all of that. Apart from that, every year 3, 4 trading ventures we start as a family. So all these trading, around 30 to 40 trading ventures are there in our family. And my involvement in startup aggressively has started after JIF. This JIF is it's Jito Investment and Incubation Center. So I had learned from there how to incubate a startup.
Absolutely. That's a wonderful story. So I think you're half, or not half, you're probably even a full billionaire in making, right?
Thank you.
Now, one more number guy. I think now to Shaker sir. Okay, I'll call Shaker for this, right? So
Thank you, sir.
Shaker, so quick a quick journey about you, how Anova was built, and how coming to Startup Investments, right? And just for the sake of the viewers here, I approached Shaker to correct my financial numbers, to how to look at numbers and etc. about 10 years back. So he guided me, mentored me in my early stage of career. So that's just an input I want to add. So off to you, Shaker.
Thank you so much, Santosh. Always a privilege, interacting with you. So much to learn from you too, Santosh. So basically, a Pakka chartered accountant, as you know, 17 years of corporate life. Worked with ExxonMobil, moved to KPMG, and then Yardley of London, all multinationals, and then now 12 years of entrepreneurship. So in my corporate world, what I did was looking at mergers and acquisition, looking at restructuring, refinancing. And because I was a Pakka chartered accountant, as you know, you always look into financial controls, you look into corporate governance, you want to look into financial reporting, all those typical stuff, that a CA would do. But then, in December 2012, I left the corporate world because we sold the group to Lee and Fung, which is a billion-dollar, Hong Kong-based group. Somewhere this entrepreneurial bug bit me. So from June 2013, I started this business called Anova. My journey into the startup world, started by making direct investments into 3 startups. As you know, it's a very wrong decision. Now I can now go back and reflect because 2 of them, unfortunately, went bust. So I'm so glad, that experience came to me. So when I started my journey as an angel investor, the biggest motivation for me was this prospect of discovering the next big thing, which is what we are all for, the next big thing in Nama. Okay. If it is the next big thing, obviously we know that there is going to be significant high returns. That was very, very tempting. So I knew that I was filled with a emotion which was excitement, but there was also hesitation because I knew that startup journey is not going to be easy. So what I decided was I started networking with other investors, interacting with other investors, which was so valuable to me, Santosh, because one of the key message I got in my early journey as angel investor is this startup investment is not a sprint race, it's a marathon. And we all know that anything and everything worthy takes time.
Perfect. That was a lot of information, but very very nicely put, right? There's a lot of takeaways as well, from what you said. I mean, having
Thanks.
you yourself sold a company to a billion-dollar company, and I know the number of companies that you've worked on M&As with and etc. So I'm pretty sure audience have a lot to learn from you, right? So now coming to myself, a quick a background of mine. So I did my mechanical engineering in 2010. I passed out in 2010. I was a straight out of college startup in spite of having got placed in 2 or 3 companies. The reason because probably it would sound a little silly, but I didn't want to get stuck in a 9 to 5 job because I felt that I should not use the word, but I felt it'd be too boring what I'd be doing. But eventually, I got myself put in a most responsible seat. Right, that's how I started. So I started up straight out of college, and I have built this digital consulting firm wherein we help build software products for other companies, enterprises, and startups. That's what we do, right? And we have it's been about 14 years right now. I started back in 2010, and I have now moved to London. I live in London, but I have my offices running in Toronto, US, China as well as in India. A lot of 60% of my workforce is back in India. So we primarily are a software powerhouse, right? And apart from that, from 2016 to 2021, I co-founded a blockchain and a cryptocurrency startup that I exited. It was acquired in 2021. With that exit, my lifelong ambition of trying to be a debt-free man that I could achieve only in 2021. I completely became debt-free because I think that itself is a big peace of mind. Okay, I was submerged in debt at some point of time, right? So these are the 2 companies that I ran, and coming to the world of startup investment, since I work with startups a lot, we build for a lot of products for a lot of startups. My vision was to try and build a founder-friendly fund, right? I've still not completed it, but I'm on the journey, and Startup Singam has definitely helped me. I mean, prior to Startup Singam, I invested in 2 startups, small check sizes, and I think in Startup Singam, I think I invested in 4 startups, in which I think one due diligence is still in happening. I think that the rest 3, I'm being a part of. My vision is to try and build a $100 million startup fund within the next with by 2030. So that's where I'm heading towards, and so that's sort of my background and my journey into the startup world. So let's jump on to the next questions again in the interest of time, right? Aruna, so what sector of startups that do you invest, and how do you personally identify and evaluate the startups? And do you look at only non-profits and NGOs, or do you look at regular startups as well? That would be my question to you.
The first point is how does one actually judge that this is a startup that is worth taking a chance with? You actually realize that this is not a science, but as you grow, as the organization grows, there are more numbers for you to validate. But when you are an angel investor, you really don't. You're only looking at the hope that the promoter is showing you. So he's telling you that I have a marketable product, I have a viable product and this is the unit economics. And then, this is the kind of market I can capture with it. And I have this kind of a team to do this. So this is all a story of hope in the initial stages. Now, when it comes to founder, based on some of my experiences, I have started discerningly looking at a founding team. I'm not just like that comfortable with a single founder. Because of some situations we had gotten into earlier, I find that I'd be far more comfortable when we have a team that is talking to us, that has ownership and that believes in this commitment and idea. So I think that is one thing that I would place value to. And beyond all that, I think in angel investing, I say it is an art because you trust your instinct. You want to, go with some founders because you believe, you can see that in them.
Perfect. And you mentioned two more things, which is number one, instinct, right? Yeah. So that definitely plays the role. And the last but not the least is the ability or the willingness to pivot, right? Even I've heard a lot of startup stories where founders, I have been pivoting my entire life, being honest with you, right? Now coming to Shikarji, now what's your magic mantra of identifying and evaluating a startup? How do you look at it?
So basically, Santosh, as I said, I've invested in more than 70 startups, which also means Adi Vada Kuttu Vangirken. Okay, that's what it means. So after a period of time, I've realized that I need to come up with a framework. And this is a framework I come up with. It's called 4 M's. The first M is a market. So basically what I try to understand is that, is it a large attractive market, for the startup to actually scale up? Because if the market is not large enough, they will not be able to sort of come up with a problem which is also solving a bigger issue. I always say that if the problem is not large, how will you find that many customers? The second M is a model. Pakka chartered accountant. So I always say that idea never fails. It's the business model that fails. I come to my third M, which is the favorite, which Nirmal sir also said, Aruna madam also, said, the management. The teamwork makes the dream work. Finally, again, Pakka chartered accountant, very, very simple, momentum, I call it. What is momentum? Have you cracked something? Can you show me some traction? Can you show that something, is evolving from your end? That's very, very important. Second, I need a credible business plan. I don't want hockey stick.
Perfect. So, great. So, I think I'll come to the most important question. So, question with Shekharji first. As an investor, right? So, how do you exit a startup? When does it happen? Is it 6 months, 1 month, 1 day, or is it going to be 10 years or what? So, exit a startup, what's the usual formula or mantra?
Very, very important question, Santosh. And as I began, saying that angel investment is a marathon. So patience is required. So typically what I tell, myself and probably my circle of friends is also have a period, anywhere between 3 to 5 years or 6 years as a basic period. Sometimes it can go beyond, 6 also, but you may be lucky, it can be within, 3 years also, it's possible. As you know, from an Indian income tax angle, because it's startup, it's unlisted, beyond 24 months is what is long-term capital gain. So better than, 2 years is what something, we expect. So 3 to 5, 6 years is what we anticipate. How do we get an exit? Typically, Santosh, when we invest at an early stage, as you know, the startups always are looking for next fund. So as some of the bigger investors come, they do not want the small investors because they want the cap table to be sort of clean. That's when we get the benefits called secondary. That's how they buy us out and therefore we exit. Sometimes it's a strategic sale. A corporate may love the startup and they may buy them off. And when that happens, again, we get the exit. Sometimes it can go for an IPO. I've not had the experience so far of my startup where I've invested getting into IPO, but that's another way, by which the exit happens. My own examples are the first 2 cases where an investor who was a bigger investor who came in and therefore I got the exit, or a strategic sale happened. Just to throw some of the names, when we had an exit opportunity in Stage, which is an OTT platform doing so well, I took that exit opportunity. It was very good exit, for us. So was the case with another startup called Finance Buddha. Again, I took that exit, when that exit happened.
Beautifully said. I think. I didn't know you had these many exits, by the way. Probably you didn't speak about this on your website or whatever. Glad that you're able to do. What's your perspective, Nirmal? How do you think? Have you had exits in any of the investments that you've made, and what's your perspective on it?
I have made certain investments, and our through Jito, actually GIF, through that incubation platform, around 200 startups we have invested. We have made exits at around 7x, 10x, sometimes 20x also. Around 20 startups exits have been possible.
Arunaji, so what's your perspective? I mean, how about the exit stories from your end and how things mute again, please. Sorry.
So I think Native Lead as a platform has had both exists and then some have failed also. But I think I would like also to take off on that point that both Nirmal and Santosh made about starters, the founders actually reaching out for help at the right point of time. I feel that there is a lot more diffidence in tier 2, tier 3 startups where they are not able to seek help that easily. The startups are more evolved and matured when it comes to cities, whereas these startups are just maturing, and they're a pitch that I listened to 5 years ago and a pitch that I listened to in tier 2, tier 3 now are vastly different. I can see how much they have grown and evened out now. But I feel that some of the earlier startups were late in asking for help. And also, the level of monitoring that is needed of a startup was much more like, once in 3 months, you needed to look at their figures, their MIS and all that to figure out all these kind of things. It is mainly because that ecosystem was not so well developed and the startup idea itself was not so well entrenched. But I think we are right now, and especially Tamil Nadu with our government doing so much for startup, and you've got, I think we're the second largest number of startups in the country now. So I think this platform, this whole thing is evolving.
Let's do, I think, 3 question answers, right? Let's pick up some 3 top questions, probably 4. One of us can answer from each. I'll probably shoot it to Shekhar. So there is this gentleman, Jay, who has asked, do you follow a coach before check approach, right? And what does that look like? Do you coach your startup founders before you sort of write a check, or is it only a number thing? That's his question, right? So how do you do it at Anova and on your startup, firm?
So firstly, it's a very beautiful question. So hats off, to Jay,
True, very
for
true. I think it caught my eyes too.
beautiful question. Yeah.
True.
I would sort of, slightly modify the word coach or mentor. We always say that, are we good in guiding them? Because, clearly we have gray hair, which means, we have the experience of having seen, certain world aspects in terms of how businesses run. So one of the things that we do is, do we have that ability to guide the startup before considering the investment? So as Nirmal sir and Aruna madam beautifully said, I think our ability to work with the founder is very important. So I always use this phrase called CTC, and CTC is not cost to the company, which is a familiar phrase now. With so much of hue and cry is happening on the salary hike. CTC is the founder coachable, teachable, and the third C is very relevant, correctable. So what we're trying to look at is, is it possible for us to guide, the founders so that we are able to get the best out of them? And can we be a subject matter expert in the area, where we believe we have to offer the domain expertise? Because we'll not be good with all startups. Because startup founders themselves, are quite smart and clever and capable. Wherever we think, that we can sort of guide them is when we do it. It's not a natural instinct to guide. What is natural in us is 3 things. One is, I think Aruna madam beautifully said, problem solution fit. Second is therefore the founder market fit, which again, Nirmal sir said. But the third thing for me comes from all this, the product market fit.
Perfect. That I think that clears the answer for Jay. So this question is during regular showcasing of product journey, product growth, product prototypes, if the team fails to live up to your expectation, what happens then? That's a question that Mr. Babu Emila asks. So how do you handle that, Nirmal? If the product is not growing according to the timeline,
Yes, when the product is not growing according to the timeline, definitely we will have to analyze why it is not happening. And definitely somewhere, whatever the company has decided, something would have not clicked, or some area or some department would not have performed. That's why the product has not done well. So how to make it do well? Definitely the time has to be given to the startup to correct the product and to make the product proper GTM, go to market, whatever is required for the product. Those things are very important actually.
Got it. I think that's well explained. I think this question I'll route it to Aruna ji, right? So this is by one gentleman, Mr. Sundar. He asks, getting periodic updates from startups are challenging, but how do you manage it? Or what's the process that can be implemented there?
I think that's a very good question, and it's very
Absolutely.
Very pertinent. See, one of the things that as an asset class, when we invest in startups, we know it's patience capital, and you also know that it is difficult capital. What you do need is regular updates, especially when we are dealing with tier 2, tier 3, where what I want to go back to what Shekhar said, the compliances are very important. Are they filing their returns on time? Are they, do they have an MIS? Do they know what happened last month? How much cash are they burning? All of these things are very pertinent.
Got it. I think hope that answers the question there. So probably I'll answer this. Okay, there are two more questions. One I'll answer, probably one I'll end with Shekharji here, right? So one, okay, Megavaran has asked, how do you judge your correct investments, right? What are the top three list? I think we covered that during the discussion, but I would like to take that question up just to revisit that and summarize that before we call it a day. So correct investments, like I recall Arunaji said, it's number one, an intuition of having met the right startup. Okay, it's an intuition, and I don't think I can explain intuition in words here, right? So it's an intuition, but apart from that's an intangible sort of a value.
Yeah.
But the tangible sort of a value is the clarity of product, clarity of market, clarity of numbers, and the last checklist is, like Shekharji said, a clear roadmap to profitability. Because sabse bada paisa, so it's all about numbers game, right?
Yeah.
So founders without a clear roadmap to profitability is going to be a bit of a challenge. Right. So those are the answers to Megavaran's question. So this will be the last question I'm taking, and this I'll direct it to Shekharji. Because this question is interesting, if not, I would have wound up now. Do startups pay dividends till you make an exit? Do startups pay dividends? Right. So that's the question that this gentleman has asked, Tamil Arasan Arachami. Yeah.
Guys, again, a beautiful question. But as investors, trust me, we are not expecting dividends. It's nice to have, but not a must to have. So what we are expecting is, can the startup use that money to grow the business? Because end of the day, as I said, we are looking at a capital benefit for us. Therefore, no, we are willing to wait for 3 to 5 years or 6 years to get that money. But I'll flip it. If it is an MSME, where we are investing, which has got a beautiful gestation period by which, they have actually grown the business, and from there they want to scale it up to the next level, we wouldn't mind putting in some money for dividends, but not in the world of startups, because we really want the startup to grow, to flourish, to make it really, really big. I mean, if you ask Aruna Madam or Nirmalji or Santosh yourself, I think we will all echo the same sort of sentiment, saying that bada hona chahiye, pirsa hona money. That's our, blessing and prayer to the startup. And therefore, we are not looking at dividends. I'll be honest with you. We're looking for you to reinvest that money so that you can grow significantly.
Perfect. Thank you for that, Shekhar. I think there's a lot of other interesting questions, but obviously we have come to the end of the program. So probably I'll advise you guys to write to the Startup Singam team, and we can, all of us as an HNI investors, we can try and respond back to you over an email if possible.
Yeah. Can I just give
Yes, please. Yes,
couple
please.
of remarks? I think because you started with the subject of that of this being a HNI is wanting to invest. I think only three things I want to say. Understand the asset class. It is patience capital. Remember that it is patience capital, and it's not like a fixed returns of a mutual fund or FD or something like that. And then secondly, I think invest about between 5 and 10%. Would you agree, Shekhar, of your portfolio? Put between 5 and 10% into startups.
Absolutely, yes.
And again, put it into a basket. Multiple investments, don't put it into one startup. If you do all of that, and I would advise you, if you're going to start first time, become part of an angel network, because you have that learning curve over there, and due diligence and then vetting of like these financials, everything gets done by them. The term sheet gets done by them, and different instruments of giving to startup, all of that gets done by them, and you can learn over there. And also the most important kind of investment that you can make in a startup is a passion investment in a domain that you are interested in. Then you become an excellent mentor to that person. So these are the few things that I want to say for first time investors in this thing.
So now I would happily pass it on to Arun to probably conclude on this.
Yeah, and thank you so much, everyone, and thank you. Just hi all. This is Sadepan Subramanian. I manage investor relations at Startup Singam, and I'm equally happy and excited to see all our four panelists today. And it was a wonderful fireside chat, also, by the way. Not just a panel; it was a kind of a fireside chat, because we had a lot of friendly and casual discussions being in place.